Hi, this is Ian Coleman from PIA, and this is this week's video analysis for the dollar index and the FX majors going into the 22nd of October 2018. We're going to start off with the dollar index. We're going to break down through time frames, highlighting chart formations, patterns, and also our bespoke support and resistance levels, trying to decipher what's going on or what we're expecting to happen this week. So starting off with the dollar index weekly chart, impulse Elliott wave moves to the downside, 1, 2, 3, 4, 5. Period of consolidation at the beginning of 2018, and then this quite impulsive move higher. Now, we have posted a reversal formation at the high, and that's an evening star pattern, and that's that free candle pattern that we see here. We moved down into the Ishimoku cloud, and then we've had pretty mixed and volatile trading really for the last 3 weeks. And if we look to last week's price action, you can see that we've closed only with mild gains and spikes in either direction. That basically highlights indecision. So at the moment, just from this time frame, we are getting a bearish bias. We are on a fib level, but we're having a period of consolidation. Now, if we break down to a shorter time frame, and this is the daily chart, we can see that reverse count to the upside, and then we've got these complicated arrows, if you like, on the chart, which are highlighting correction patterns. Now, the reason I've got these is because I believe that we're forming a bearish head and shoulders. So this will be the left shoulder here, this will be the head, this is potentially already formed a right shoulder, bearish engulfing candle posted on Friday, sometimes highlights the top of a trend. So I'm just highlighting these patterns, and this is an AB equals CD, takes us down to around about 93, the figure. If this plays out to a head and shoulders pattern, then the measured move is from the break of the neckline, which is around about 94, the figure, and that takes us further to the downside and past actually the 61.8% pullback level, takes us all the way down to around about 90.75. So we're expecting limited buying. If you actually look to the left hand side, this trend line held 3 times. We've now held twice. Maybe scope for another move higher, but I think the resistance level is pretty strong, and we're still looking for a move down in the dollar. So obviously, if we're looking for a move down in the dollar, then as you know, if you have been following some of our medium-term calls, then we're obviously looking for buying opportunities in euro dollar, sterling dollar, and obviously selling opportunities in dollar Swiss, etc. So we'll now go over to those currency pairs and discuss what we're looking at. So this time frame, reverse of what we've seen, the weekly chart in the dollar index. I believe we're in an AB CD formation to the upside. From current levels, that takes us to 119.28, which is a 50% pullback of this bearish move. We've got some bespoke resistance levels to the upside en route, 117.10, 118.62. This, I believe, as well, has the potential to be a reverse head and shoulders. So left shoulder, head, right shoulder. The actual trend line break is a way off yet. Let's just get that. So yeah, trend line break. I mean, if it was to break this week, it would be around about 118, the figure. So we really need to break down to shorter time frames again to see what's going on. I'm just going to show this time frame first, and there you can probably see that head and shoulders, or that reverse head and shoulders, a little bit better. So this being support, and obviously drawing a trend line down to here. We've got the potential of a double bottom formation. We've posted a bullish outside day on Friday. That often indicates the end of a trend. For the double bottom formation to be confirmed, we need to see a break of 116.20. So is this a buy trigger? Yes, I think so. But again, if we look to shorter time frames, and we're going to break down here to the 3-hour chart, that last wave to the downside can be seen in 5 waves, and then we've got this impulse move to the upside on Friday. So again, I think there's scope for a mild correction and sort of buying dips early on on Friday would be wiser than just buying at the open. If we just open this up slightly, and again this is just the intraday chart, this is now the hourly chart. If we put a fib extensions, we're not that far off the 261.8% extension level. There's an intraday exhaustion count, which means that this rally could be short-lived first thing on Monday or even overnight. We've got a previous swing high here, and again, you know, these reverse head and shoulders patterns, if we do get a spike higher at the open and then look for sort of dip buying opportunities, probably around about 114.95 or even down to here, 114.80. So yes, we are still bullish. I do believe at the beginning of the week, on Monday, there's going to be opportunities to dip buy this pair for what could be potentially a decent move to the upside. So we're looking at quite good risk reward setups as well for buying dips. Sterling dollar, let's just look at the weekly. You can see spikes 1, 2, 3, 4, 5, closing these sort of weeks, if you like, with little neck change. That's highlighting the volatility in this currency pair. Excuse me. If we go to this time frame, again, this is a weekly. We were long at 130.55. We actually got stopped at 130.60. Yeah, stopped on a flat trade. We're still looking for this ABCD formation to play out. But if I go down to a shorter time frame, this is the daily. Okay, we've got no reversal formations here. We've also got no bespoke support or resistance levels. What we have got on Friday is we've got a trend of higher lows coming in at 130.007, and we've got bespoke support at 130.005. So again, a bit like euro dollar, the scope for a move to the downside. This one could actually make a new low, as opposed to euro dollar making a higher low, I believe. If we go to this time frame, and this is the 4-hour chart, like I said, we've also got trend line support around about 130 the figure. This looks like it's making an ending wedge pattern, so a break of resistance, and we should get an impulse move up towards 132.36. So again, bullish on sterling dollar. Remember what we're looking at in the dollar index, or what we're expecting to happen in the dollar index. So we're expecting rallies to be sold in the dollar index, so we're expecting dips to be bought in sterling dollar. I think around 130 the figure, if we can get down there, is going to be a very decent sort of support level, especially with this Fibonacci confluence area coming in here, 78.6% pullback and a 161.8% extension. I think any dips around about 130 the figure are going to offer quite decent risk reward, because remember what we're looking at in the long term is this move up towards the previous sort of area resistance and an ABCD formation around about 135, 135.50. Dollar Swiss, it's the sort of the rally that keeps on giving at the moment, but there's a few sort of telltale signs that we might be facing exhaustion. Again, we've got potential for a bullish 5-wave count. We didn't make the 261.8% extension level, and that's actually at 99.63. Now we can see that price action on Thursday and Friday last week has consolidated around that area, and this could be a 5th wave extension, so 5 and then down, and then a 5th wave extension, and then we get the pullback to the downside. No clear signals as yet. Again, is this an ending wedge pattern? We really need to see a sort of solid break, and I think a solid break of this support really 99.50 at the beginning of the week, to then potentially take us down to 98.60, which is obviously an area that's been quite pivotal and is the wedge target for the breakout. Dollar yen. Where do we start here? I think the weekly chart. The weekly chart highlights an evening doji star formation, so similar to what we saw in the dollar index last week. Although dips were bought, all price action was in the lower half of the previous week's range. If we look to a Marubozu level, which is the midpoint from the open and the close, that's going to be around about 112.95. If we go to shorter time frames, let's go to the daily first. Okay, again, mixed volatile price action. We did see a bearish outside day posted on Thursday of last week, and then an inside Arami. So this sort of pattern here is just highlighting indecision at the moment. If we go to this time frame, we had our bespoke resistance. I think it was around about 112.70. We are short in dollar yen over the medium term. Again, I think this is a 5-wave pattern to the downside. So 1, 2, 3, 4, 5th wave extension. And we're now in a mixed and volatile correction to the upside. Now, an AB/CD correction would take us to 113.05. Trendline resistance is around about 112.97. 50% pullback level is at 113.08. So really, prime area is here for selling into rallies this week, but this could be a large triangle formation, and this trend line has capped price action on Friday. Remember, we've got that bearish outside day. Remember, we've got an evening doji star formation, so I don't really want to be buying into a correction. I want to be selling into what I think is going to be the next major move, and I believe that's going to be the downside because of those two reasons, and this move higher has been mixed and volatile. So really, I think the call is to sell rallies, especially with congestion area up here as well. A break of trendline support, which comes in around about 112.07, and the correction is completed. We can expect a stronger move to the downside. Dollar CAD, we caught a decent one on Friday for sort of dip buying, but I think the long-term picture is quite hard to decipher in this commodity currency at the moment. Now, trend of lower highs, and that was our target level on Friday, 131.30, has capped the upside. We've got a doji. Really would need to see a low close on on Monday, below 130.15 to give us any sort of topping formation. That would actually be an evening star formation. We've got bespoke support at 130.33, so I think initially we'll probably get a little bounce, and buying dips really, if we're trading off the system, then buying dips as all the support is below, there's not a lot of resistance to the upside, then really we should be buying dips. But if we go to this time frame and remembering our bias on the dollar, then rallies really could be limited this week. We've got reverse trendline resistance located at 132.22, and the most interesting thing on this chart is the fact that we've got bespoke support here, which is at 124.50, and that's just above the 161.8% extension level at 124.09. So this is a great medium-term target level, but we really need to see price action at the beginning of the week to see whether or not we're going to get a topping formation on that daily chart, or whether or not we're going to look at potentially selling into rallies around about 132.22. Now, we've got the Bank of Canada rate decision on Wednesday. We could see some sideways movement in dollar CAD until that comes out. So it could be a case of trading a break after or during the rate decision next week. And again, it's really quite mixed at the moment, but the bias, especially because we've got the dollar bias, we've got that reverse trend line. The bias is mildly bearish, but the concern is here, and this is an expanding wedge formation, and that actually has a potential bias to break to the upside. If we look for an ABCD formation, measured move. So you take the AB, come here, and then project it onto the CD. That, even a breakout to the upside, hits sort of a congestion area around about 132 the figure, and remember we've got that reverse trend line resistance at 132.22. So I'm not too keen to buy breaks. I prefer to sell rallies in dollar CAD. Aussie dollar, this is the last move to the downside. Stalled. We actually tried to buy dips last week, but we didn't get down to the 261.8% extension level. This week, I think we're going to continue to see mixed and volatile price action. Again, if we get a consolidating period in dollar CAD, we could easily get a consolidating period in Aussie dollar. They have a tendency to sort of track each other to a certain extent. 71.72 is trendline resistance. 71.78 is a 50% pullback level. The reason I've highlighted this area here is because we've actually got a confluence area. 72.07 is our bespoke resistance, and then 72.11 is the 61.8% pullback level. So at the moment, I think the calls to buy dips, but again, we've not got a lot apart from this trend line support at the beginning of next week. We haven't really got a lot of support to the downside, so it's quite a difficult one to call. On a medium-term basis, we'll still be looking at least to sell into rallies, but that could change. Euro sterling broke the channel formation to the downside. Levels close to the 61.8% pullback level found sellers. Impulse break as well, and then a doji, and then dip buying last week. But it's not really a strong move higher, I believe. 88.72 is bespoke resistance. 88.87 is reverse trendline resistance, and that's really the prime area going into this week. If we go to this time frame, which is the Euro Sterling 2-hour intraday time frame, an ABCD formation takes us towards the channel top at 88.53. Like I said, we haven't really got any bespoke resistance until 88.80 and 88.70. So I wonder if this is going to be a bit more of a prolonged correction higher before we see sellers re-emerge. And remember, when we go back and we think about correlation, think about the fact that we're more bullish on euro dollar than we are on sterling dollar at the beginning of next week, and that should give euro sterling a bit of a boost. Like I said, I'm still bearish over the medium term or long term bias, so the preferred trade is still really to sell into rallies in euro sterling as opposed to sort of buying into what I believe is a corrective rally. Euro yen, let's just break down time frames on this this pair. 5-wave move to the downside. We really were quite attracted, if you like, towards this area because we had a 261.8% extension at 128.02, and we had our bespoke support at 128.10. Didn't make it, and we have seen quite a decent move as well to the upside. Again, would I be buying at the open on Friday? And that's why I've shown this shorter time frame, because we've got our bespoke resistance here at 129.81. We've also got an exhaustion count on the intraday chart, so I think potentially we could see 1, 2, 3, 4. This could be 3, 4. This could be 3, 4, and then I think we're going to exhaust in a 5th wave. Quite an impulsive rally though, and that would probably mean that the move or the correction to the downside is limited. But you know, 129.22. If we look over here, it's a previous area of support. I mean, it's going to be quite a decent area to get in for a long-term move to the upside for euro yen, at least going into next week. Okay, I hope you enjoyed the video analysis. I hope it's given you some insights, at least to my thinking, going into the 22nd of October. And we'll speak to you again soon. Good luck with your trading this week. Okay, thank you. Bye.